Healthcare stocks aren't exciting. They don't double overnight. But in 2022, when everything else was bleeding, they kept me standing. Here's the thing nobody tells you when you start investing. The safest parts of your portfolio are usually the most boring. And healthcare? It's aggressively boring. No hype, no headlines, just people getting older, people needing medicine, people going to the doctor. But that's exactly why it works. So in this video, I'm walking you through how I use healthcare stocks as part of my recession-proof foundation, how much I allocate, what role they play, and why this unsexy sector might be the smartest thing you're not paying attention to. Okay, so real talk, I didn't start with healthcare stocks. When I first built my portfolio, I was all about tech, growth, excitement. I wanted the stocks that moved. And then 2020 happened. Then 2022. And I watched my tech-heavy friends panic sell while their portfolios dropped 30%, 40%, some even more. Meanwhile, I looked at my healthcare allocation, which at the time was only like 5%, and it was just there. Steady, stable, boring as hell. And that's when it clicked. The goal isn't to have a portfolio that's exciting. The goal is to have a portfolio that survives. So why does healthcare hold up when everything else is falling apart? 3 reasons. 1. People don't stop getting sick just because the economy tanks. You can delay buying a new car. You can skip the vacation. But you can't skip chemotherapy. You can't postpone insulin. You can't avoid surgery. Healthcare is non-discretionary spending. It's not a choice. It's a necessity. 2. The population is aging. Baby boomers are retiring. Life expectancy is increasing. And older people? They spend way more on healthcare. That's not a trend. That's a demographic inevitability. 3. Healthcare companies have pricing power. When you control something people need, you don't have to compete on price the same way a retail store does. That gives healthcare companies more stability, even when the market gets ugly. So here's how I personally use healthcare in my portfolio. I allocate 10 to 12% to healthcare stocks. Not huge, not tiny. Just enough to act as a shock absorber when the market gets choppy. Here's the role it plays. 1. It balances out my growth positions. If tech drops 15%, healthcare might only drop 3%, or even stay flat. 2. It pairs beautifully with utilities and bonds. All 3 are defensive. All 3 reduce overall portfolio risk. 3. It gives me optionality. When the market crashes and everyone's panicking, I'm not forced to sell at a loss because my healthcare allocation is holding steady. It's not about making a killing. It's about not getting killed. Now, I'm not going to tell you which healthcare stocks to buy. That's not what this channel does. But I will tell you what kinds of companies fall under this umbrella so you know what to look for. Pharmaceuticals, companies that make prescription drugs, big names, stable revenue. Medical devices, think pacemakers, surgical tools, diagnostic equipment. Health insurance, companies that manage healthcare plans. Biotechnology, more speculative, but some focus on long-term treatments and therapies. Healthcare services, hospital systems, outpatient clinics, elder care facilities. The point isn't to pick one company and go all in. The point is to get exposure to the sector, usually through an ETF or a diversified mix, so you're not betting on one drug approval or one earnings report. Here's the other thing people miss. Healthcare doesn't just survive downturns. Sometimes it actually outperforms. When the market gets volatile, investors flee to defensive sectors. That means utilities, consumer staples, and healthcare. It's a flight to safety. And because healthcare demand doesn't drop during a recession, it often increases because stress leads to more health issues. You get this weird situation where healthcare stocks can actually rise while everything else is tanking. I saw this firsthand in 2022. While tech was getting destroyed, my healthcare allocation basically flat. Some positions even up. That's the power of boring. Look, I get it. Healthcare stocks aren't sexy. They're not going to make you feel like a genius at a dinner party. But investing isn't about impressing people. It's about building a life where you don't have to panic when the market drops 20%. And that starts with stability. So before you chase the next hot stock, ask yourself, do I have a foundation strong enough to survive the storm? Because if you don't, no amount of growth is going to save you. Build the roots first. The growth comes after. Next video, we're wrapping up this series with the one strategy that ties everything together. Don't miss it. I'll see you there.